Well, good afternoon from the floor of the CB. This is Chris Robinson, Managing Director and Partner at the Calguy Group, and we're talking about grains today here, the 18th day of July. And the last 3 days have really been painful for producers and or bulls that were not expecting the type of correction we've had. Here's a breakdown for you. Corn, wheat, and beans. In the past 3 days, corn's dropped 37 cents a bushel. Beans 38, wheat 38, soybeans 43 cents. So that's happened in 72 hours. And really what we have is a case of expectations not meshing with reality. When you have a weather market like we've had, when you've had concerns across the country that, that we had a large loss of planted acres and some disagreement as to how accurate the USDA's estimated planted acres are. You throw that all into a ball of wax, and we've had a very, very volatile 2018. How volatile? Well, between the May 15th lows, contract lows, corn, wheat, and beans all rallied well over $1. You had about a $1.30 rally in wheat and soybeans. You had about a $1.19, $1.20 rally in corn. Corn rallied from contract lows to 5-year highs. So in the wake of those highs, though, we've been drifting lower, and then we have an acceleration this week. And what caused the acceleration? Well, again, it's a disconnect between what people thought and what the markets actually has to go on when it comes to true numbers and true reality. So this is a weather market. I'm speaking to you today where we've had a pretty good correction. Corn, for instance, let's start with D's corn. On today's lows, we came back to within about a dime of giving back pretty much exactly half of the rally. That halfway back area is 418. A lot of bulls and a lot of bears watching 418 in D's corn. It's going to be probably going to be a battleground between now and the next USDA, which comes next month on August 12th. Ditto for December Chicago wheat. The correction today, this 505 level, lo and behold, that's about halfway back, almost exactly, of the rally that we've had. Soybeans are still held in there okay, fighting at that $9 level new crop. But this is a perfect situation of how volatility breeds movement, and movement has a tendency to punish both bulls and bears if you're not disciplined with your position. You go to bed at night, you wake up in the morning, corn, wheat, and beans have moved a dime. If you don't have some sort of protection on either way overnight, you're taking a huge risk. You're basically going to bed and playing roulette. You're spinning the wheel and thinking, well, is it going to land on red or land on black? So you really need to be utilizing some sort of risk management. If you're a speculator, you need to keep your stops very, very tight. If you're a producer, when you get a good rally like we've just had, earlier in the year, you've got to do something to reward that rally. If you're a producer, you're always bet long. You're a net long speculator. It's kind of like you're trading and you've got one hand tied behind your back. You're long, long, long. So while volatility is good for a lot of different reasons, because it gives us lots of opportunities, it can also be very, very emotionally I guess you call it mind-numbing. Very, very upsetting to watch these markets move, especially if you don't have some sort of methodology in place to capture profits. So at the end of the day, it's a pretty easy game, right? Cut your losses, let your winners run. But when the market's swinging around 25, 35 cent moves, you really have to be very, very careful about two things. You must maintain discipline, and you must control your emotions. If we're able to do those, a month from now, 2 months from now, 3 months from now, when the crop's all in, then we'll go back to trading supply and demand. But a weather market like this gives you lots of opportunity for lots of volatility. And I'll close with this. Whoever out there is telling you that they know where we're going to be 3 days from now, much less 3 months from now, they're just taking an educated guess. So I would resist the temptation to look for someone who has the crystal ball, who has the system all figured out. I'll just leave you with that. So lots of opportunity, lots of movement, but you really have to be very, very, very disciplined when you're trading or hedging these markets. If you're looking for help with that, look me up online, Chris Robinson, the Cal Guy Group. You can also look me up under Chris Robinson, the Robinson Review. Have a great rest of the day.